So taxes and allowances, right? Now, when you work, you have to pay tax to the government. This tax is called PAYE, P-A-Y-E, or pay as you earn, right? So this is tax based on your gross salary, right? Now, they have allowances and taxable income. So an allowance is any money that cannot be taxed, right? And your taxable income, oops, taxable income is your gross income or your gross salary or your gross wage minus your allowance. What is this basically? This is the money that the government could tax. And your net income is the gross wage minus the tax. So the formulas you have to really remember: the net income, the taxable income. Now the tax is basic tax. So tax is you rate by the taxable income. So this is another formula you have to remember. All right, so Mr. Parks with 5 children receive non-taxable allowance from his gross salary according to the table below. So a personal allowance of $1,400 per month, laundry allowance $2,300 per month, housing allowance $3,150 per month, and a family allowance of $900 per child. This is very important for up to 3 children. So calculate his non-taxable income, right, for the year. Now we have to pay attention to these allowances, right? So you want to calculate his non-taxable income for the year. Now, the personal allowance is $1,400. And if you multiply by 12 for the year, right, make everything a little bit closer. Right. 14 by 12. So it's $30,800. Your laundry allowance is $2,300. Again, multiply by 12 months to get the year's allowance. So 2,300 by 12. 27,600. The housing, $3,150 by 12 for the year. $69,300. And the family allowance is $900 per child for up to 3 children. So even though he has 5 children, he will only qualify for 3 times this amount for the year, which is 12 months. So 900 by 3 multiplied by 12. $32,400. So his total allowance for the year, you add this up. Or you could have added these up and then multiply by 12. It will work out to be the same thing, right? If you had to work it this way, add these up and multiply by 12 at the end, you will still get the same answer. So 2,800, add 27,600, add 6,9,300, add 3,2,400. So his allowance for the year, $160,100. If his gross annual salary is $800,000 and income tax is charged at 12%, 12.75% on the taxable income, calculate the total amount he pays in tax for the year, his net income, and what his monthly income would be. All right. So B. So we know what is the allowance. So his taxable income is his gross income, or gross salary, or gross wage, minus the allowance. So 800,000 minus 160,100. So 800,000 subtract 160,100. 160. So his taxable income $639,900. The tax that he pays is the rate by the taxable income, and it's 12.75% or 12.75% by 639,900. Remember, it's a percentage, so I divide by 100. So 12.75 divided by 100 multiply by 639,900. So the amount of money he pays in taxes is $81,587.25. Right? So the amount he pays in taxes. So this is part 1. Part 2 is net income. And the net income is a gross wage minus your tax. So this is how much money you'll bring home after taxes. So 800,000 minus $81,587.25. So 800,000 subtract $81,587.25. $718,412.75. So this is the amount of money you will bring home after tax. Now the last part where they ask us what will be his monthly income, you would divide the net wage, right, by 12. Why? Because this was a yearly thing, right? So you divide by 12 months. 718,412, that's 75 divided by 12. 718,412.75 divided by 12. So his monthly income is $59,867.73. We had to round it off. All right. So Jane Root's monthly salary of $12,000. The government charges 25% tax on all monies over $6,000 per month. Calculate her net yearly income. So the information that is given is a salary or monthly wage, which is $12,000. They also give us what the allowance is, which is $6,000 per month, and they give us the tax bracket, which is 25%. Right, so that's the information that is given in the question. So that's here, here, and here. So to calculate the net yearly wage, you have to find out how much money she pays in tax first. So the tax is the rate multiplied by the gross wage. So it's 25%. Before we do that, we have to find out what's the taxable income. So you make a mistake there. What's the taxable income? So the gross wage, which in this case would be the monthly salary, minus the allowance. So 12,000 minus 6,000. So they can charge a tax based on $6,000 of your salary every month. Right? Right. Now the tax is the rate by taxable income. So 25% by $6,000, or a quarter of $6,000. So every month you will pay $1,500. Now your gross wage is your salary. Minus the tax. So 12,000 minus your $1,500. $12,000 minus your $1,500. So $10,500. So your net yearly wage or income will be a gross wage after taxes by 12, because this would have been a monthly wage, right? So 10,500 by 12. So multiply by 12. So for the year, $126,000.